Drop everything, everyone. Swift just tested XRP, and this one slipped right under the radar. And guess what? Not only was XRP right in the middle of it, but so was Hedera, Quant, and Algorand, your ISO 20022 tokens. What I'm about to show you in this video changes the entire global payments game in real time. Let's jump right into it. And let me say this as clearly as I possibly can. Swift, they have already tested its ISO 20022 framework with XRP, XLM, Algorand, HBAR, and Quant. Not planning to test, not evaluating, already tested. This is the moment the legacy financial rails, the systems that move trillions of dollars daily, finally acknowledges the new internet of value. And listen to this quote directly from them. It states, industry observers expect that by January of 2026, further integration of central bank digital currencies and tokenized assets will take place, potentially supporting new models of digital transactions and cross-network interoperability. What does that all mean? That is your fancy way of saying the world's biggest banks are preparing for a fully tokenized financial system. And XRP, it's the core of the test batch. This is the physical moment when theory becomes practice, and Swift, it is testing with XRP. It means, 1, banks are preparing for interoperability. Number 2, banks are preparing for tokenization. And number 3, banks are preparing for liquidity bridges. This is the signal. This is the shift. This is why the XRP community has been screaming about this for years. But now it's happening publicly. And before we move on, the next part, it's the most important. If you want updates like this minute by minute, well, they happen in my free crypto newsletter. Drop your email down below. Sign up for it. And listen, if you want clarity, direction, a real plan to position yourself, book that one-on-one call. Only if you're serious, though. If you're not serious, don't do it. Links are below. Now let's get back to the chaos. Japan just passed a 21.3 trillion yen stimulus package. That's 135 billion USD. Think about that. Traders around the world, they're on high alert. They are watching for yen intervention. Whenever a government has to artificially support a currency, it means something underneath the surface is cracking. Stimulus of this size, folks, let's make it clear. That's not normal. It's not calm. It's not controlled. It screams the system is shaking and we're trying to keep the plates spinning. And this ties directly into the next piece, the part people really need to understand, which is right here. This is the global financial system breaking over in Tokyo. We talked about this a little in the other video. If you didn't watch it, go give it a watch. And if you haven't hit the thumbs up yet, hey, hit that thumbs up for me. The more thumbs up we get, the more YouTube will send this viral. Look, Japan's 30-year bond yield, it hit a 3.41%, the highest since 1999. It sounds harmless because a lot of people don't actually understand what that means, the effects of it, right? But once we start to look under the hood, Japan owes 230% of its GDP, the most indebted nation in human history. They survived for 35 years by borrowing at near zero rates. I want to borrow money at near zero rates. Sounds phenomenal. But guess what? That all came to an end. Your inflation is up. Your bond yields are absolutely exploding. China, they're getting aggressive with Japan. And defense spending, it is skyrocketing. The Bank of Japan, as we talked about, they got two possible choices, right? You can raise your rates and you can kill the debt market, or you can keep rates low and you can kill saving through inflation. They're going to choose option 2. But here's the part that should absolutely terrify Wall Street. Because every major bank, every major hedge fund, and your institutions, they have spent 3 decades borrowing cheap yen and investing it elsewhere. The carry trade, it may be worth anywhere from $350 billion all the way to $4 trillion. No one knows the real number. If Japan's system snaps, that money, it's gonna unwind. And it's gonna unwind instantly. Last time we got a preview, Nike dropped 12.4%. The NASDAQ, 13. This wasn't the earthquake. This was just your trailer, right? The math on this, it's freaking horrifying. It might keep you up at night. So every 0.5% interest rate increase is 45 billion more debt cost. So every 0.5% rate increase is 45 billion more in debt. At today's yields, 10% of all tax revenue, it goes to just interest. That is the death spiral threshold. The yen is sitting at 157 per USD. If it moves to say 152, the carry trade becomes unprofitable. Your unwinding, it begins. Emerging markets, they drop 10 to 15%. The NASDAQ by 12 to 20%. The Bank of Japan is meeting December 18th to 19th. This is now a global trigger event. If they raise rates, volatility explosion. If they don't, inflation goes nuclear. This isn't a recession, folks. This is the change of the guard. The liquidity engine of the past 30 years, it just seized up. And when liquidity dies, guess what? People run to non-sovereign assets like crypto, XRP, Bitcoin, Ethereum, Chainlink, Ondo, you name it. This is all connected. But then we get this because Dom dropped this out. This is beautiful. Let's zoom out for a second though. Because no one in crypto, what I have realized over my past 8 years in this market is that no one in crypto likes zooming out. They actually like zooming in. They like to look at the 1 minute, the 15 minute, the 60-minute chart. I don't know why. It just drives you nuts. Maybe they like the size of those green candles. I don't know. Back in April, we looked at a Bitcoin cycle, or Dom looked at this Bitcoin cycle, I should say, and he overlaid all your different parabolic curves here leading into day 1060. You can see your red line, that's your 2018 cycle. Your blue is the 2015. Most of you probably weren't around. I wasn't even around. And your green is 2022. Everyone's saying markets, they're weird this year. 8 months later, guess what? This actually played out almost perfectly. The pattern's there, the behavior is there. The timing is there as well. The only thing missing, can you guess what the only thing missing is actually before I tell you? It is the final parabolic move in the last 2 months before day 1060 hits. And guess what window is opening right now? This is the hardest psychological moment in crypto. Half the people think the cycle is broken. The other half realize that it's happening exactly as always. But the next piece is going to blow your mind. Because while retail panics, guess what? Someone just placed a $377 million buy order on Bitcoin. It's not retail, everyone. 377 million, guess what? It's not coming from retail. I can't stress that enough. No one puts in nearly $500 million unless they know something, right? Smart money doesn't chase hype. Smart money front runs its macro shift. Smart money positions silently while everyone else is scared. This is a bet on what is coming. This is a bet on the cycle. This is a bet on a liquidity rotation. And XRP, well, sorry to tell you, it's part of the rotation, everyone. And what I'm about to show you, well, guess what? This proves sentiment is reversing at full speed. Tom Lee, he just expanded his thoughts on sentiment. He's like, hey, look, ETH's bottoms in, the recovery to all-time highs, it's going to be faster than the decline. Listen to him.
That's the low, and Ethereum bottoms at 2,500. The recovery from there to all-time highs will be faster than the decline. That's what happened in every crypto decline. Because what you have is all this spooled up energy. People are sitting and waiting, and there's panic selling, forced sellers, but the buyers are being patient. That's what will happen. And again, you guys kind of hit it on the head. MicroStrategy is probably the most important stock to watch right now because that is the Bitcoin proxy. It's the most liquid name. It seems to me that when in the crypto world, when they're trying to hedge their longs in Bitcoin and Ethereum, they can't find any other way to hedge it except shorting the liquid stocks that
this
are the
reminds
proxy.
okay
So that's the strategies.
This is one of, if not the most important interviews I've done this year, and that's respectfully to every other guest we've had on this fine network and fine show, because I want to dive in a little bit deeper to what you're saying, that basically there's some kind of a software coding problem that's causing a lot of this. Let's bring up, guys, if we can, MSTR. That is the company formerly known as MicroStrategy, now just known as Strategy. The stock's down 50% in 3 months, Tom. It's down about 65% from its highs in the middle of July. It works, or people think they do, but inside that engine, there are gears, there are pistons, there are things that are occurring that for 99.9% of our audience, they don't do this for a living. We get it. This is a really important interview. I'm going to let you go, Tom. We are watching MicroStrategy or Strategy. We're watching Bitcoin, and we're watching possibly 77,000, which you think might be kind of a washout period, correct?
Yeah, that's right. Tom DeMark, who is an advisor to BitMine,
Very
has
well
been
known to
really
me.
giving us a lot of insights. Yeah, he's watching that. Actually, MicroStrategy at this level here probably is when you want to ratchet into the longs, and Bitcoin maybe just a few $1,000s lower.
So
I think we're there.
we might be at the bottom for strategy.
Yeah.
Well, there you go. Strategy I hope strategy's at the bottom. Look, very bullish interview, right? It's hard to call a bottom, especially when we make YouTube videos, because if I tell you the bottom's at 85 and it goes to 84.9, you can be like, you missed it, you were wrong. We don't call bottoms around here. What we do is we try to DCA in. We try to DCA in as close as we can get to the bottom. But make no mistake about this. When majors like Bitcoin and ETH start moving, your utility assets, your settlement assets, your interoperability assets, they're going to move as well. And then Jim Cramer, he told us everything that we wanted to hear today. Listen.
Bitcoin is like at 81, and you're looking at what I regard as being the single worst moment in this decline was the moment between 330 and 430. And then Williams comes on, and then suddenly everything's fine. I don't think so.
You don't think everything's fine?
No, there's a lot of people who have to get out. Let them get out. This is not what suddenly they wave a magic wand. We obviously have real issues. We have issues with the building out the data center unlimited. We have issues with a lot of people.
I don't know about you, but I like when Creamer's bearish. Well, Creamer. I call him Creamer. Maybe I want a coffee. I like when Creamer's bearish. Creamer's bearish means we're bullish. Creamer's bullish, you means you better exit the markets because we're about to get bearish. Look, everything that we just talked about, from Swift testing XRP, Japan breaking the global system, Bitcoin cycles are still aligning, whales loading up on hundreds of millions, Ethereum bottoming, XRP's getting close to his bottom, sentiment turning bullish, Cramer screaming bear market. It all paints the same picture. A major move is incoming. Whether that move happens this year, Q1 of next year, or Q2 when Trump gives out stimulus checks, all we know that it is coming. And people want to say, I can't handle the weight. Well, if you can't handle the weight, you know what you can do? You can do what every other American in crypto, or that is not in crypto, what they are doing. They are going to work 9 to 5 for the next 30 to 40 to 50 years until they are able to retire. If you can't handle waiting another 3, 6, 12, 2, 4, 5 years, well, folks, well, you have another path, and that path, it's called the stock market. It's called retirement. It is called working for 30 to 40 years at a desk job that you are not used to. Crypto is the ultimate life hack. Make no mistake about that. Sometimes you just got to wait. I've been waiting 8 years. I'm prepared to wait as long as I can because I know it's not going to be me waiting 30 to 40 years for a retirement plan from work where you can only invest $23,500 per year because they want you to be stuck into the system. RIP doesn't play that game. You shouldn't play that game either. We are here before the institutions, and you should be proud of yourself for doing that. And I've told you before, and I will continue to tell you, they will try to shake you out every single minute of every single day. Do not fall for the trap. You know what you hold. You see that Swift is testing it. If you need further conviction, if you need some more research or someone to talk you off the ledge, hey, we got one-on-one calls. Load them up. If you just want the free newsletter, go sign up for that as well. I'm going to leave it right there. I hope you enjoyed. Hit that thumbs up. Make sure you subscribe. I'll catch all y'all